Welcome back to The Big Skinny with me, Lou Basenese. You know we're having fun when your wife texts you and goes, I just turned it on and you were stripping. That's not a good sign, folks. We're PG here always, but I want to tell you, we're not PG with our takes on the market. We're ruthless if we need to be. And our first guest today, what I appreciate about her, we've spent time on Maria Bartiromo's show multiple times, is that she always is data-backed, data-driven, but cuts through the noise and the BS. So I'm hoping that she's got some no BS take for us today because I need it. Well, let me welcome to the show Stephanie Pomboy, the founder, president of Macro Mavens. How you doing, Stephanie?
I'm awesome. It's a pleasure to be with you here on The Big Skinny, Lou.
I know. I like it. What do you think? Everyone doesn't know what to think of the name, but I think it's fun. So we're rolling with it.
It is fun. I mean, this business is serious enough. Can't we just let our hair down and have a good time?
Amen to that. Listen, I got to confess, I probably made a mistake on TV today. I was talking about like second half of the year. I don't really see anything that could undermine this bull market. But then I did make one comment knowing that we were talking later. What's scary to me is that I'm not scared about anything. So I knew we would be talking and you could give me some insights on what should we be worried about right now, right? We're getting tariff and trade deals done. The big, beautiful bill passed. What's lurking in the shadows that could really undermine this current market rally, in your opinion?
Well, this is a softball pitch down the middle for me, Lou, so thank you, because, you know, my whole self-imposed mandate is to identify the unseen risks that no one's really recognizing. And there's a major shadow lurking that is already eroding people's returns, and they're unaware of it. So I would not argue with you. I'm not going to arm wrestle or do a wager with you as to whether the stock market's going to continue to power higher into the end of the year. What I will say, and has been the case, is that paper assets have been underperforming hard assets for more than a year now, but they've really trounced paper assets this year.
So you're talking about like gold mining stocks, which I believe you were early on pounding the table to buy gold mining stocks. Am I right?
Yeah. I mean, I started years ago talking about gold, the physical metal, as a way to hedge your portfolio against dollar debasement, which I thought would be forthcoming. And so you did have that. And now the gold miners are starting to take off just because it took a real legitimate increase in the gold price to persuade people to buy these crappy companies that are legendarily, poorly managed.
Traded on the Vancouver and promoted by shysters, but still levered to gold prices. Yeah.
I mean, it's a very checkered group of companies, so you've got to do your homework. But what I will say is so far this year, gold, the metal, is up 26%, even after all the drawdowns we've seen in the last week, and the S&P is up 8.5%.
Yeah.
So
do you think that was just a delayed response that played catch up, or do you think it continues now too with the continued deficit spending, et cetera?
Yeah. So, I mean, this is sort of my overarching thesis is, and has been for a long time, I'm kind of a broken record, that our fiscal situation is so far gone that I know the administration's trying everything they can to get us to a position where we can accelerate growth and at least grow the economy faster than interest expense. But at this point, we're 37 trillion. There's no way we're growing our way out of our fiscal problem. And all we have to do is have, stub our toe economic wise, a recession or a downturn to have the deficits mushroom again, so the efforts that Doge made will go flying out the window if, we have a quarter of negative GDP. So we have no wiggle room for any kind of error here in terms of economic growth. And so as this all comes full circle to the Federal Reserve conversation that you teed up earlier in your monologue, and this fixation on the Fed funds rate is one that I find fascinating because it's another thing where everyone's focused on one thing and they're missing the real story. And that, in my view, is the Fed funds rate. It's not even clear based on market action that lowering the Fed funds rate is going to bring interest rates across the curve down.
Well, I mean, look at the last time Powell lowered rates. The bond market said, yeah, we don't trust you, we don't believe you, and we're going to jack up yields and go north to 5%. So do you think that happened? Like, let's say, I mean, I don't think, you correct me if you think otherwise, I think there's 0% chance of a cut this week. But September, there's probably a really good chance. Do you think the bond market responds positively or negatively again, like it did last time?
I think that Trump last Wednesday, was it? It seems like a year ago now, that we woke up to news that he was imminently going to fire Powell, and the bond market sold off on that news. And then he looked, I think Trump did this to kind of test the market. Let's get the market's opinion of what's going to happen. And as soon as he got that information back, he immediately said, no, I was never thinking about firing Powell. So, I think he's clever like that. He wants to see what the market reaction is. He put it out there. He got an answer. It wasn't the answer he wanted. And subsequent to that, he's been a little bit more restrained in his criticism of Powell, let's put it that way.
It's got to be hard for Powell because he knows Trump hates him. But to your point, Trump is the master of reading the room. I think he thinks it's better to buy the rumor and sell the news. People figure that out if he replaces him or announces a shadow Fed. So just keep threatening to replace him, and that'll keep the markets calm. I mean, do you think that's the case as well?
I really think what he should do is just, rather than waiting till December to name his replacement, name it now and get that guy, whether it's Kevin Warsh or whoever it is, to start giving speeches and going on CNBC and Fox Business and talking about what his policy is going to be, because then he basically takes the podium out from under Powell. Powell becomes a lame duck the minute Trump announces his successor, because no one's going to care what Powell says.
So basically take a page from Trump's playbook when he won the election and just started having pressers and telling everyone what he's going to do. And
exactly.
Yeah.
So I don't know why he doesn't. Why is he waiting till December? Do it now if you're really fed up with Powell and you completely neutralize him. He becomes a lame duck immediately. But what I was getting to in this whole thing is that the balance sheet is where all the action is going to be. And that's why I, started out being long gold, and now I've kind of tried to diversify into the gold miners, is that I think that it's just a matter of time before they end up having to re-expand the balance sheet to absorb the massive amount of treasury issuance. I mean, this year, over the next 12 months, we have $7 trillion in debt that comes due. People think, well, the deficit's $2 trillion, so we only have $2 trillion in debt that needs to be refinanced. But the fact is, because Yellen financed all the debt with T-bills, we've got a tremendous amount coming every day that needs to roll. So we have $7 trillion in 12 months, and our foreign creditors are all running in the other direction. I was just looking at this number a couple of minutes ago. In the last 3 months, foreign central banks have sold $60 billion worth of treasuries. So if you annualize that, we're talking about $240 billion in sales by our one-time creditors, which isn't going to help us.
It's not going to look good. So let me ask you this. What's the solution out of this outside of government slowing spending, which is not going to happen? Do you see crypto as an answer, the whole move to basically make it acceptable to have stable coins, which essentially just buy treasuries? They become a huge customer for the government. I mean, is that the new solution that's palatable to the markets, and we just kick the can down the road? Or do you see, this is what I respect about you. There's a question here. I promise that you have been banging the table about just runaway spending. It's going to have an impact on gold and inflation, but you're not a doom and gloomer like a Peter Schiff that's been just incessantly saying the world is ending, yet, find some, you find the golden thread somewhere. So where do you see that? What is the next logical step that happens from here?
Well, I think like I said, in nominal terms, the stock market and, paper assets can continue to move higher. It's just that in real terms, you'll be lucky if you stay even with the dollar debasement. But one thing that's interesting as relates to crypto, and I'm not, I prefer gold. I just don't, I'm an old woman. So I'm a Luddite. I belong in a cave. I don't understand the allure of crypto whatsoever.
You like tangible assets, right? Yeah, not intangible digital assets. Yeah.
Or wear it or whatever. It's got to be something I can enjoy.
Hey, I came from Jersey, so I understand wearing gold. So,
Okay, I love it. You're not showing your pinky ring, but I'm sure you've got one.
I got some cousins that have that, but we won't talk about them.
Oh my God. But what I was going to say is that comes back as well to the hard asset paper play, because not just, obviously the impetus for establishing these cryptocurrencies was to create an alternative to fiat money. But the interesting thing is, if you look at, let's say, MicroStrategy, which has been a barn burner because it's a levered bet basically on Bitcoin. And you think about that as, one of the hot areas. And then you've got AI, the other real powerhouse driving the market higher. I mean, essentially, those are the twin engines of this levitation in the stock market. But they both rely hugely on energy, like basic resources, to say nothing of rare earths. Like, you need to have that underlying resource, and that underlying resource is scarce. The ability to, create paper claims is infinite. But the future of AI and the future of crypto is only as good as their access to those basic resources.
I swear she's not reading off of my cheat sheet. I started working, you know me, I've been a tech guy for 20 plus years, and I started working with an oil and gas company in January because I realized, one, the president was bringing in a new regime that was going to favor American energy independence, but two, the biggest tech trend of my lifetime was never going to happen without energy, reliable energy. And I mean, I've been sharing with people that, China's kicking our butt in terms of energy generation, right? They're not ahead of us in terms of AI tech, in terms of AI company formation, but they have brought online almost 9,000 terawatt hours of energy in the last 20 years. We've brought on a measly 800. So I think, why do you think so many people are missing this major ingredient and enabler? And where do you see it playing out?
It's just not sexy. It's much more fun and exciting. It's the fact, right?
True.
Who wants to talk about rare, basic rare earth minerals and oil, and when you could talk about NVIDIA and crypto and Bitcoin and all these things that are going to the moon? That's exciting. It's the shiny new toy. Oil and rare earths have been here since before you and I got here, so
no,
it's just
the
not
truth.
that exciting. It's not new.
I'm out there. I'm glad to hear that there's someone else out there that's championing the same reality. I mean, we're not novel ideas here. It's just a fact of economics. You can't power all these data centers unless you find all forms of energy, right? Natural gas, oil, coal, solar, wind, nuclear, you name it. Before I let you go, I know you have a hard stop here, but any other insights that you think people are just missing in this market that they need to be paying attention to from a macro perspective?
Well, I think the number one thing that people are missing is that they're being silently debased through this decline in the dollar. And yes, the dollar's rallied a little bit in the last week, but it's down 10% this year. So if you're not paying attention to your real returns, you're missing it. So I think that's very important. And again, I would underscore that rather than fixating on what happens to the Fed funds rate and whether it's going to go down 25 or 75 or how many basis points in the next however many months, think about the balance sheet and the possibility that that ends up being enlisted again to help service our enormous debts in the absence of those foreign creditors used to do that. And then I guess the final point that I would make that is not popular and sort of gets missed in the mainstream coverage is this idea that the low and middle income households in the US are in recession. And that's not a statement about Trump. I think they've been in recession for 4 years, and they're starting to get some relief in the form of, reduced inflation. And we'll see if they get relief in the form of lower interest rates. I'm highly dubious about that part of it. But they should hopefully find better job opportunities as we reshore some production and bring, really strong manufacturing back to this country.
That's a great point too. And it's starting to show up in the data in terms of blue collar wages. They were down 1.7, almost 2% under Biden in the first 5 months. So that was in 4 years. In the first 5 months, they're up 1.7%. So you need to see that trend continue. Listen, always appreciate your insights. I know we'll see you this week, I'm sure, on Maria Bartiromo's show, sharing those insights. So I encourage people to tune in, to check out your website at macromavens.com, and would love to have you back when I start getting way too bullish and need some grounding.
I will be your resident mistress of doom anytime you need it.
Love it. That's your moniker from here on out. That's what we're putting on the cover on next time. So, Stephanie, thanks again, and always a pleasure.
Great to see you. Thanks, Lou.